Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In today's video, we are going to be looking at something every trader needs to know if they want to take their Forex trading to the next level. And it's a popular topic. The topic we're going to be looking at in today's video is the smart money strategy. Now, this approach is a game changer for traders as it's all about understanding how big players, banks, institutions, and large investors move the market, and how you can use that knowledge to improve your trading skills. Okay, so if you are ready to unlock some valuable insights, hit that like button and let us get started. Okay, so in case if you have not heard of the concept before, then stay tuned as we dive into this topic. And even if you are already familiar with the smart money strategy, then I believe you could learn something new. All right, so first things first, what exactly is smart money? In Forex, smart money refers to large institutional traders like banks, hedge funds, and financial giants who influence the market with their huge buying and selling power. Now, when these big players make a move, it can shift the entire market, causing major price trends and such that impact retail traders like you and I. Okay, but here's the key: smart money isn't random. These players have access to advanced data, research, and analysis that most traders can only dream of. Now, they tend to follow patterns that you can actually learn to spot. Once you know what to look for, you can start to trade alongside them. So instead of against them, you trade alongside the big players. All right. Now, that's where the smart money strategy comes in. So why does smart money strategy matter for us retail traders? Well, because it helps us align our trades with the big guys instead of fighting against them. Think about it. If you can learn to recognize the moves of smart money, you'll know when they are positioning for a buy or a sell. And if you can enter and exit your trades in sync with them, you are more likely to make consistent, informed decisions. Now, this approach doesn't guarantee wins. Like every other strategy out there, the smart money strategy is not foolproof and it does not guarantee profits. Okay, but it does help you avoid unnecessary losses by trading with the flow of the market. It's like surfing the waves instead of against them. Okay, now let's break down some of the key components of smart money strategy. There are a few main things you want to look out for. Now, the first is liquidity zones. All right, smart money players like to buy low and sell high. Usually, it is not even recommended that you buy high. For example, as we can see, this is XAU USD, right? And it is in a strongly bullish trend that began somewhere around here. It began last year. As we can see, the bullish trend actually began somewhere around October 2023, right? But then we had a form of consolidation after a while around December, let's say November, December 2023, we had a consolidation that lasted until February, okay, until February 2024, right? And then we had a bullish breakout. As we can see, the bullish breakout occurred around here, right? So after the breakout happened, we have seen a consistent increase in the value of gold till now. We are already getting towards the end of 2024 as at the time of recording this video. And at the time of recording this video, we are in November 2024. As you can see here, This is November 2024, and gold has been on a consistent buying streak. All right. So in this situation, it is ideal that you trade in the direction of the trend, right? You follow the flow of the market. However, having already climbed this high, any buy position that you are entering should be taken very cautiously, because it is possible to see a very significant pullback, and you wouldn't want a situation whereby you are seeing large drawdowns, okay? Unless if maybe you already have some open positions which you entered at lower prices, and then you just want to stack up some more buy positions, then that is fine. And it's even ideal that when doing that, you should do that after pullbacks. Okay, so you ideally wait for a pullback to happen before you even enter the buy position. So usually it is ideal to buy low and sell high. You wouldn't want to buy when the price has already gone very high. Okay, because it can lead to very huge drawdowns, especially if the slope was very steep, especially in steep slopes. All right, if it is a gentle slope, it can even be understandable. Perhaps you might just see a moderate drawdown and then a continuation, or if a reversal is about to happen, you might even see a consolidation before the reversal actually happens. Now, smart money players look for, liquidity zones, because it allows them to move large amounts of capital without drastically affecting the market. Okay, and then in terms of market structure shifts, that is another important factor. All right, it's important because it helps in understanding shifts in market structure. Okay, smart money traders look for specific patterns that indicate a shift in the trend. For instance, if you see a downtrend breaking into higher highs and higher lows, it could signal that smart money is moving in and changing the direction. Spotting these shifts early can help you jump into the trend as it's forming, not after it's already too late. Okay, now another component of the smart money strategy is volume and time analysis. All right, smart money strategy also involves analyzing volume and time. Big players often trade during high liquidity times, such as the London and New York sessions in the Forex market. Paying attention to the volume at these times can give you clues as to when the big players are entering and exiting. Now, how do you identify smart money movements? Now that we know what smart money is and why it matters, let's get into how to actually identify these smart money movements. The first is price manipulation patterns. One of the things to watch out for when you are trying to make use of the smart money strategy is price manipulation. Okay, you'll often see moves that trap retail traders. It happens a lot of times, right? It's like false breakouts. Okay, for example, if you see a breakout above a resistance level but the price quickly reverses, it's likely that smart money was using that level to create a trap. Okay, this is a tactic to lure in retail traders, and then the price quickly goes in the opposite direction, wiping out those trades. So look out for these fake outs. It's very important. Remember, like I always say, whenever you have a breakout, it is very important that you confirm your breakout with a retest. On normal basis, after a breakout happens, there are chances, a high chance, that there will be a retest before the breakout continues. Even if the retest does not exactly touch the exact breakout point, the price might not get to the exact breakout point, but at least it should get close to the breakout point before a continuation in the direction of the breakout. So that's one of the ways to validate a breakout. Okay, so it's important that you watch out for fake outs and avoid them. Now, secondly, one of the smart money movements to watch out for is institutional candlestick patterns. There are also certain candlestick patterns that can indicate smart money's involvement. Patterns like engulfing candles or pin bars at significant price levels can be a clue that smart money is moving in. All right. These candlestick patterns often represent strong buying or selling pressure by institutional players, and spotting them can give you an entry signal aligned with the big guys. Okay, so it's important that you pay attention to such institutional candlestick patterns. All right, now another important smart money movement to watch out for is order block zone. Okay, smart money also tends to create order blocks, which are zones where they've placed large buy or sell orders. You can often see these as clusters of consolidation or tight ranges before a big move. Now, it is actually possible that we had something of such around here, right? It is actually possible, okay? Before we had this big move, right? We can see this notable consolidation that happened around here. Let me just highlight it with a rectangle, okay? So we can see this notable fluctuation, this notable consolidation that happened around here before a big move. It is possible that smart money was involved. I'm not saying that I'm certain, but it is actually possible based on how the move played out, right? Based on how it played out. So when price revisits these order block zones, it can be a good entry or exit point for your trades. All right, identifying these zones helps you understand where smart money might enter the market. Now, let's talk about how you can start implementing smart money strategy in your own trades. First of all, start with support and resistance levels. All right, mark your major support and resistance levels, especially on the higher time frames like the 4-hour and the daily charts. Okay, it doesn't matter what kind of trader you are, whether you are a scalper that does not exactly have much businesses with the higher time frames, or whether you are a day trader or a swing trader. It's important that when you are marking your support and resistance zones, you do it on the higher time frames. Even as a scalper, you can just decide to go to the higher time frames and mark your zones, and then go to the lower time frames and execute your trades, right? Because price will likely respect the support and resistance levels on the higher time frames compared to those on the smaller time frames. So when you mark your zones on the higher time frames, even if you are trading on the smaller time frames, you will still trade in accordance with the overall price action, right? So you would even be on the better side if you are respecting the price action on the higher time frames, because the price action on the higher time frames will definitely overshadow the price action on the lower time frames. Okay, so it's important that you mark your zones on the higher time frames. It's very important. All right, now these levels, when you mark your support and resistance levels, basically levels of rejection. When you note points where you have at least 2 rejections, you mark those zones, and then you can mark as many as you can find, minimum of 2 rejections. All right, it's very important, as you can see me doing on this chart. Minimum of 2 rejections. You mark your support and resistance zones. These levels are where smart money likes to operate because they often represent psychological price points. Now, secondly, use a risk management plan. Trading with smart money doesn't mean taking big risks, okay? Make sure you are managing your trade sizes and using stop losses. Remember, the goal is to align with smart money, not to act like them in terms of trade volume, all right? Now, thirdly, backtest and practice. Go over historical data to see where these smart money patterns have occurred. Test how well you can spot liquidity zones, manipulation patterns, and shifts in market structure. The more familiar you are with these patterns, the easier it will be to recognize them in live trading. Okay, so there you have it. Smart money strategy is all about understanding and aligning with the big players in the Forex market. By learning how to identify liquidity zones, market structure shifts, and price manipulation, you are setting yourself up for a smarter, more strategic approach to trading. If you enjoyed this video and found it helpful, don't forget to hit that like button and subscribe to the channel for more insights like these. Let me know in the comments if you have any questions, and I will see you in the next video. Thanks for watching, and until next time, trade smart and stay safe.